All right. Welcome to the First Exchange Commercial Real Estate Market Pulse. This is going to be our bi-weekly market update. I'm Logan Freeman, Managing Director, Managing Broker at Exchange, and I'm thrilled to kick off this series where we're going to be diving deep into the latest trends, listings, transactions, and insights in the commercial real estate sector. This event is designed to keep you informed and engaged with the market's pulse. And that's why we're having it every 2 weeks. So we'll be coming to you live every 2 weeks with fresh updates, valuable information to help you navigate the commercial real estate landscape effectively. All right. Before we dive into today's content, I'd like to introduce you to our fantastic team. So give me 1 second while I pull up everybody here.
Okay.
All right. Excellent. How are we doing today, everybody?
Doing great.
Doing great.
Feeling pretty excited for this first one, too.
Fantastic. Fantastic. So we got 3 of our team members here today. Katie Cobb, who is everything brokerage operations. Micah Beebe, our multifamily broker and specialist. And then Nathan Roberts, our investment sales on the multi-tenant retail, flex industrial, and office side. We have a few folks here that weren't able to join us today. And so I want to just make sure that everyone knows the full team. Max is on vacation over, I don't even know where Max is. Katie, Micah, where's Max at in the world today?
He's in Scotland, Ireland, and England.
Yeah,
All right.
I was just going with Europe. So you actually nailed it a little bit more there.
There you go.
So he's
enjoying the sights.
Yeah,
I think he's
so
having
he's
a great trip.
a long ways away. And then we have Chad Kagi, who really does a lot of brokerage with the healthcare sector. And then Nick Morales, who's working with business owners on sale leasebacks, understanding if they should lease, if they should buy, and working on the capital market side of our business. So this is our team. We're very excited to be here and serve everybody's commercial real estate needs in the Kansas City area. All right. So one thing I wanted to talk about, just generally speaking first, is multifamily. So Micah, I'm going to pull you up here and I'm going to take everybody off and I'm going to figure out how to do that. Bear with us. By the way, I forgot my housekeeping items. If you do have any comments or questions or any feedback, please drop that into the comments sector. We will be watching that and covering that. Okay. Let me get this set up correctly. There we go. So we're looking at here the market report for the multifamily sector in Kansas City, really year to date. Okay. So thinking about what has happened in 2024, right? And some key highlights here definitely stand out to me, right? And I think that I'm posting on LinkedIn on a regular basis, specifically around Kansas City, and saw some great reports that Mike and I will talk through here shortly. But one key factor to take a look at is the annual rent growth. We're sitting at 3.1%. And in Real Page's latest report, they had Kansas City as the number 1 market month over month, 3.8% year rent growth. Micah, why do you think that's happening in the multifamily sector in Kansas City?
Yeah, well, Logan, I think there's a lot of things that are happening that are really positive in the Kansas City market. I mean, we have so many big projects that are going on. We've got the Panasonic battery factory out in DeSoto, Kansas. You've got Google that's making a huge investment, building 6 different data centers. You've got Meta that's building their data center. That one is already vertical. And so there's a lot of excitement. Then we have the women's soccer stadium north of downtown. And so, I mean, there's just a lot of really exciting projects that are bringing in a lot of jobs. And so we're continuing to see that unemployment rate stay low. We're seeing that job growth. And so you're seeing that we're having that continual rent growth, positive rent growth. We're also not seeing, like, for example, in the Sun Belt region, we saw a lot of new construction come online over the next 12 months, or over the last 12 months, and over the next 12 to 24 months, we're going to see even more. And so you have a lot of property owners that have been really struggling to fill up their property. And so they've had to give a lot of additional concessions. And so that's why you've
Yeah.
seen negative rent growth. And that's one of the things that I talked about on LinkedIn is that it's really difficult to get an accurate picture of what's going on in the multifamily space by looking at the really broad picture across the country. And
Yeah.
it really is getting on that granular level and going market by market, because you can't do that saying, well, this is the average across the country. You need to look at what market in particular, what region, and then drill down into what is the city doing that you're looking at. Where are you wanting to invest, and what does that look like? And so if you're an investor out of, say, Florida, Kansas City's dramatically different than what's going on in Florida right now.
Mm-hmm.
So you're not seeing the same kind of metrics take place there.
Yeah, that makes a lot of sense, and I appreciate that. A couple other key highlights here to take a look at is the vacancy rate hanging up around 8% here in Kansas City. If you're wondering what the market rent is here in Kansas City for a multifamily asset, it's about $12.98. We have 4,700 plus units delivered over the last 12 months. And absorption and demand is one thing that I'd like to key in on next, Micah. So let's go to our next slide here. This is going to overview Q2 and the sales volume that happened, because we all know that it's been a tough space to be in with commercial real estate in regards to getting transactions done. It's just been really hard. And we're going to talk about some of those macroeconomic factors in regards to why in later slides here for the market pulse. But in Kansas City, about $100,000 a door was this at the average sales price. We had right around $88 million of volume closed in Q2. But Micah, I do have a question, and you spoke about the jobs being created, which is obviously going to be a big factor in regards to getting absorption and demand. But what do you think the current demand for multifamily housing in Kansas City is, and how has that changed just over the past year or two?
Yeah, I mean, I think there's, look, people always need a place to live, you know? I mean, we hear that a lot around the multifamily space, and it really is true. I mean, people always need a place to live. And I think that people are also drawn towards the really nice amenities. I might be getting ahead of myself a little bit. And I think that's another thing that we're going to cover is what tenants are really attracted to, and different amenities that owners can have in their properties that people really like. But I think that, you know, there's going to be a continual demand, and plus, when you have a community that has continued job growth, you're going to see a continual demand for housing. And the issue that we've seen in housing over the last couple of years, first of all, we have a big shortage of housing, but also you have a lot of renters that are staying in place because they can't afford the interest rates on a mortgage.
Yeah.
And so it's much more advantageous for them to continue to rent and stay where they are, because there's a lot of expenses when you jump into home ownership. There's a lot of responsibility that's added to that. And so we're seeing a lot of people that are staying on the sidelines, and they're saying, look, I don't know what's going on here. I mean, because when you look at the expense of purchasing a home, I mean, it's skyrocketed. And I think that's just not an attractive thing to do at the moment, with interest rates being so high. I mean, around the end of the year last year, I mean, we did see the 10-year Treasury dip below that 4% mark briefly, and everybody's kind of getting excited. It's like, oh man, where are we going? This is looking great. And then up we go again. And, and it's also been challenging with, are interest rates going to come down? Are we going to see an interest rate cut? And I think a lot of people had predicted and hoped that we would have seen an interest rate cut by now. But I think the Fed is being far more cautious with that, just giving the current economic indicators from across the country. And so they're, I don't know, we'll see where things
Yeah.
go.
Absolutely. This was one key element that I found in the latest Real Page report. Some 390,000 apartment units were absorbed on net over the past 12 months. Dating back to the new millennium, this latest annual reading ranks as the 8th largest figure on record. But perhaps the more impressive within the context of the pandemic era boom is how many units have been absorbed year to date. 257,000 units have been absorbed during the first 2 quarters of 2024. So just what you said, Micah, in regards to housing prices and interest rates causing people to look for new rentals and or multifamily to live in, the demand seems to be there. So we're looking back here 12 months total. What we can pull from our data, we have right around $608 million of multifamily transacted in the Kansas City area. Again, that'd be from July to July. Okay, 608 million, 6,300 units have traded hands, and that's amounted to about 146 different transactions. So lots of products still moving. So a lot of interest here in Kansas City. Last question for you, Micah. And you see these numbers, you see the 600 million being traded over the last 12 months. How are deals getting done? Because I know a lot of people are pencils down and they're not really looking at new acquisitions, or they're just getting frustrated. But any creative ideas in regards to getting deals done in today's current environment?
Yeah, that's a great question, Logan. I mean, obviously, we're seeing this is something that I had talked about previously on one of my posts on LinkedIn, that deal volume is down considerably. I mean, you look at this figure compared to what, 2, 3 years ago. I mean, our peak was around 2 billion in volume, and now we're seeing figures like this, and so it's tremendously lower.
Across the country, down
So
42%. Transaction volumes down
right,
42% across the country.
right. And so, I mean, needless to say, for all the brokers and property owners and buyers out there, it's tough, and trying to find a deal that will pencil. And so, some of the things that we're seeing a lot of is assumable loans, where you still have some term on those loans at a low interest rate that got locked in back when interest rates were still good or decent, even better than what they are now. And so I think that deals can still get done in this environment. And obviously, deals still are getting done. We're not at a complete standstill, but I think you've got to be thinking outside of the box. And so I think that's a scenario where you need to have a broker on your side and in your corner that can come up with different strategies. Because, I mean, look, that's what we do all day, every day. We try to come up with solutions for our clients in order to help solve problems. We're problem solvers. That's what we're good at. And so, because we want to see our clients succeed, we want to maximize their value on what they're doing, on their investments, and we want to see the best possible outcome. And so, I think it's being able to think creatively, think quick on your feet. Of okay, how can we create more potential income on the property? Is there a way where, let's say, your multifamily property has a bunch of washer and dryer hookups? This is something that came up recently with a deal that we've been working on. Well, instead of just having those tenants bring in washer and dryer, what if the owner leased out those units?
Right. Yep.
And then, or if you have a lot of extra square footage, or maybe not a ton, I mean, could you use that space in a better way? Could you utilize that in order to gain revenue on your property? Could you convert it to storage units for tenants to use and lease out? I mean, there's different things that you can come up with, but like I said, being with an active broker like our team has, that's actively working in the market, working with our clients to close deals. We're on the ground seeing these things firsthand and coming up with solutions for our clients that will maximize their return on investment.
Absolutely. Thank you, Micah, for joining today. Thank you for walking us through multifamily. My takeaways from the multifamily sector are there's still large demand in regards to the supply and demand imbalance. We still have a large demand, especially in specific markets throughout the Midwest, where we're seeing a lot of rental, month-over-month rental increases. Okay, affordability is very important, and then working with a experienced commercial real estate broker to help you navigate those different situations and come up with creative solutions is how deals are getting done. All right, we're moving over to the industrial side. Thank you, Micah, for being here, and thank you for all of your insights. I'm adding in Nathan Roberts here on the industrial side. Nathan, what's going on, man?
Yeah, there's a few things going on. So, I mean, we're definitely seeing three evolving trends. Definitely some strong development activity out there. Right now, we have about 12.5 million square feet of industrial that's being currently in the pipeline for development.
Okay.
We're seeing
like a lot of square footage, man.
It's a lot. Yeah, it's about 3 to 4 times what we've seen like in the past few years. So as far as new supply, I mean, it is outpacing for the past 5 consecutive quarters. It has outpaced demand, but we're starting to see a pullback, which is a great thing. Another thing that's driving just industrial real estate here is e-commerce and retail demand. So ongoing growth is leading to organizations wanting to regionalize their operations, both with delivery speeds and also reducing some of the costs associated with last mile delivery. We're also seeing economic stability, and as you and Micah hinted on, labor market strength. So industrial real estate has benefited from our diverse economy. And right now, as far as like early 2024, you're looking at an unemployment of 3.2%. Compared to 4% over the past 10 years.
Yeah, those are great markers, right? I mean, industrial is a big asset class and seems to be in favor with a lot of investors. But inside of, industrial, walk us through where you're seeing kind of the most demand, right? Is it still the 500,000 to 1 million square foot industrial buildings, or is it, because of the onshoring that's going on in the United States and people bringing back their manufacturing to control their supply chain, are they looking for that 10 to 20,000 square foot flex space that can house the office staff and the manufacturing or the warehousing space in the back? Like, what are you seeing from a demand side?
Yeah, so from a demand side, I'm seeing it's mostly going to be with the smaller flex office space. So as you hinted at, a few thousand square feet up to about 10, 20,000 at the max. As far as the sublet space that has came on the market within the past year, majority of that has been in that 100,000 or 50 to about 100,000 square foot range. So the most demand right now is for those smaller footprints at this point.
Yeah, makes a lot of sense. All right, let's move on to our next slide. So $48 million in Q2 of closed volume, right around $111 of average per square foot basis. I would imagine there's a lot of new development that had been delivered and sold, and that's pushing that price up quite a bit. But 32 transactions in Q2. Our 12-month sales figure for the industrial side, 226 transactions closed the last 12 months. If my math is right, that's almost 12 per month from July to a July. That's a lot of activity going on in the industrial side. $622 million. I think that eclipses the multifamily space. And so, again, I would say if there was $6.7 million or 6.7 million square feet of industrial sold, we had a lot of that new delivery coming online. But it looks to me that there's still a big demand from an investor standpoint on the industrial side. Is that correct, Nathan?
That is correct. Yeah, we're on the same page there.
Yeah. So I think that industrial is an interesting spot. Kansas City, logistically, I believe you can get to anywhere in the country by vehicle in 2 days in the United States from Kansas City. We have really a large amount of rail here. We have a lot of transportation and logistics, and we have the Missouri River here also. So it is happening. Logistics is happening in Kansas City. Industrial is definitely a hot spot to be in. Now, within that, there's obviously a lot of different subsets of industrial. And one of my favorites right now is that flex industrial space, because in regards to new development of these, the supply that Nathan had talked about, very few of those are going to have spaces that are 10, 20,000 square feet, right? And so it's going to be a lot larger of those spaces. So be curious to watch. One trend to potentially watch is if developers start to subdivide those spaces into smaller spaces so they can attract some tenants. All right, moving on to retail. All right, so retail, man, tell me how you would describe the current state of the retail real estate landscape and market in Kansas City.
Yeah, so this is going to be driven by 3 factors. So high demand for prime retail stores or locations, right sizing and expansion, and landlord concessions. So when it comes to the demand, a lot of retailers are wanting to see high traffic corridors with strong co-tenancies on main corridors. This is driving up pricing across the board. As far as right sizing and expansions, like a few of the things I mentioned, they're wanting to be within a building with some sort of synergy between the other commercial tenants that are there. A lot of them are actually flocking towards new development. So, for example, Strang Hall, that's more of like a food hall. They're flocking more towards those new developments. They've opened a few locations over the past 24 months. As far as landlord concessions go, you're starting to see some pullback with the amount of tenant improvements that landlords are actually offering because there is so much demand for their space. They're instead flocking towards more free rent for tenants instead of coming out of pocket with such a large capital expense there.
Okay. Yeah. Yeah. I was just at String Hall. I love that place. It's such a cool concept, and it really does sort of feel like the future of real estate and the future of retail in a lot of different spaces. That mixed use type of building is really in favor in a lot of these newer kind of what I'll call suburban urban downtowns where String Hall is. And so that's definitely a trend to keep in mind. And I do believe with the other retail that's even around Strang Hall and that building, it has definitely blossomed because it's bringing a lot of people to the area. So what are retailers always looking for, Nathan, in a space? Is it vehicles per day? Is it traffic that they're looking for? Is it a certain amount of transactions? Like, what are people looking for when they're going, or tenants and businesses are looking for when they're going to look for a new location or expansion?
Yeah, I would say really it's 2 things. It's going to be that foot traffic that they're getting, and from the consumer side, they're really looking for experiential retail. So that would be things like having a rooftop bar, food halls, like we just mentioned, some sort of live music venue. And landlords are being a little bit more flexible when it comes to actually trying to bring consumers to their properties. That can include things like having more pop-up shops that bring a different consumer to the shopping center, and hopefully that creates a repeat customers there.
Yeah, most definitely. Well, looking at the retail transactions, we had 39 retail transactions closed in Q2 of an average price per square foot, which sort of surprised me, of $180. That's pretty high in regards to that. That means there's a lot of demand for retail shopping centers and retail. And our volume for Q2 was right at $52.9 million. Looking back, for our last 12-month sales volume, retail has been a hot spot. Look at this, $698 million worth of volume in the retail, 422 transactions in the last 12 months, and 4.7 total square foot, 4.7 million square feet. I mean, that is enormous. I mean, if I go back to our industrial, that's only about 2 million square feet below the industrial side, which just seems to me, but the transactions obviously a lot more because they're smaller buildings. But man, that really stood out to me that retail is a hot spot. And if you're owning commercial real estate and retail right now, it could be a really good opportunity to evaluate with a broker like Nathan to get an idea of what the value might be. And we're doing that for a lot of owners right now. But Nathan, what stood out to you here, man? I mean, that seems pretty wild to me that 422 deals were sold over the last 12 months.
Yeah. Yeah, I would say, I mean, what's really stood out for me just the past 2 months have been two trends. So we have two new records when it comes to price per square foot. You're right now we capped it at $17.99 or almost $18. That's the
Right.
highest on record. As far as vacancy in what's currently available in the market, we're at another record low, which is 4%. So those are really the two figures that have stood out recently.
Yeah.
We're just seeing so much demand for retail space at this point, especially if it is on a nice corridor with a lot of traffic.
Yeah, whenever I see that the Wall Street Journal is writing articles about a specific asset class, like neighborhood retail shopping centers and strip centers, that it's really hot, right? I mean, it's been called the darling of the commercial real estate industry here recently. Okay, that's the multifamily, industrial, and retail overview from the last 12 months in sales and in Q2 of Kansas City. One thing I would like to talk about, Nathan, is any forecast that you have in regards to industrial and retail, any trends or forecasts to be watching out for from an investor standpoint or a landlord standpoint?
Yeah, I see some ongoing trends. I mean, what we're seeing with demand, I think that's just going to continue to grow, especially with the way consumers are changing their behavior. It's kind of been continued behavior from the past couple of years, and that's just wanting to purchase more items online, right? No one's really wanting to go to a retail store, essentially to buy anything unless you're looking more for an experience. So for example, me, when I go to shopping centers, for the most part, it's with me and my friends and we're trying to hang out and experience something new. For example, String Hall is a great one. I mean, maybe we just want to go out, try different foods and just have a drink. That's more what I'm seeing consumer drivers is probably going towards going forward, and that's kind of how it's been the past couple of years.
Right on, man. Thank you for that. All right, I'm pulling up everybody now, and we're gonna have a nice roundtable discussion around the macroeconomic factors impacting commercial real estate. So I've picked out 10 different factors. We're not going to cover every single one, but let's talk about the top ones on everybody's mind, which has to be interest rates. Now, I don't need any prognostication of where we think interest rates are going because we could be here for hours on end talking about that alone. And I have a little bit of data to support maybe one thesis here recently that has happened. And we'll showcase that here in a second. But, obviously interest rates have a profound impact on borrowing costs and on mortgage rates. So when interest rates are low, borrowing becomes cheaper. That can drive up property values as more investors enter the market. Conversely, when interest rates rise, like they have in the last 2 years, borrowing costs increase. So that potentially can lead to a decrease in property values as fewer investors can afford higher financing costs on the interest rates. But I want to talk with the team here and any trends or ideas or conversations that we have had recently with buyers and or landlords around interest rates, and how are you overcoming maybe some of those objections on the conversations that we're having. Micah, I'll send it over to you.
Yeah, I think that's an interesting conversation with when we start getting into interest rates and where they are right now. And, I think the message should be that, I mean, we can sit around and we can wait for the market to shift and change. And so we can try to ride a wave in the right direction. But I think you gotta find opportunity where it's at. And I think that no matter how difficult the climate is, there's always a deal to be had and there's always opportunity. And so I kind of take the more optimistic viewpoint on this topic, because I think there's always a way to get a deal done, and there's always opportunity to be had.
I think that making sure that you have a long-term vision for your property and the strategy is extremely important, right? I mean, in the single-family home space, a lot of people will say, marry the property and date the rate, right? And I don't say that in the commercial real estate space because it does need to make sense from an investment standpoint, and we're not talking about where we're living on a regular basis. So there's a little more emotion on the where you're living, and you need to live somewhere, right? But in regards to interest rates, I think having that conversation with property owners early on, and making sure that that helps to anchor some pricing and price points is really important. Nathan, we've recently underwritten a few neighborhood retail shopping centers, and the cap rates seem to be good. The NOI seem to be good, but man, it's really hard to make those deals work because of the interest rate. So talk us through what's going on the retail and industrial side on some of these deals that the interest rates are really kind of prohibitive in making these deals actually pencil.
Yeah, I would say the biggest thing with the interest rate is it's really limiting some of those financial metrics that you're targeting. From the investor perspective, I mean, interest rates are definitely relevant, but it really depends on if that investment hits your key financial metrics. And those three are typically going to be your internal rate of return, your cash on cash return, and your equity multiple. So, I mean, if you're not hitting returns, then that can kind of be a hindrance for what's actually transacting. And that's kind of what we've seen probably the past 12 months with the amount of activity we've had.
Yeah, look, I mean, when interest rates are high, it is a good time to purchase because potentially there's less demand for that asset type. And so you always have to be thinking long-term in regards to your basis. What per square foot basis are you at and what per door are you at? And that's going to drive a lot of those long-term decisions. Katie, I'd love to ask you about government policies. I'm joking. No.
I was gonna be like, come on. Can I have a different one?
I give Katie the hardest one. No, I'm really joking. But you are in the know with the kind of happenings around the city, and you're up in the Northland, and I mean, lots of economic growth going on in the Northland around the river, going down south where I'm at. I mean, east, southwest, going out west to where Mike is at. I mean, it just seems to me that everywhere you look, there's economic growth. But what are you seeing in regards to when you're going out shopping? Are people showing up to shopping centers? Are the office building parking lots full? What are your thoughts on economic growth in Kansas City right now?
Yeah, I think that there's a ton of economic growth. I mean, it used to just be kind of one area of the city, but like you said, it's kind of everywhere right now. And it's exciting time, like the Casey Current, but everything is packed. It seems like. I was actually joking with a friend the other day that I was like, where did all the people come from? Like, where, every road is packed, everything. Yeah. And so, I mean, just the number of houses. I live in a development with, we're kind of on the outskirts of Kansas City, but just the number of people, like when we talk to neighbors and stuff like that are flocking to Kansas City because of the companies that are coming here.
Yes, absolutely. Yeah. Affordability, the jobs, and the ability to work from anywhere is driving a lot of people to move to the Midwest. Now, we will always still have really hot weather and really cold weather, and that's going to keep some people away, but more and more people are having their primary residences in Kansas City and then either snowbirding to Florida or something along those lines. We're seeing a lot of people do that. So there's a lot of different macroeconomic factors, that impact commercial real estate. I mean, inflation, we can talk about inflation. It's a pretty touchy subject. I'm not going to really get into that. We've already talked a lot about supply and demand. But there is one more topic that I kind of wanted to talk about, and that is demographic trends. Because when we talk to investors, it seems like we always have this conversation around, what is the median household income? And, how many people are moving? Is the city growing? Is this area growing, right? So in regards to demographic trends for your each specific asset classes, what are you having conversations around with investors on demos right now? Nathan, let's start with you, man. I mean, when you're thinking about industrial, you're thinking about retail for an investor around demographics, like what is those top trends and or factors that people are asking about?
So I would say on the retail side, definitely as far as demographic trends, I'm seeing a lot of growth in certain submarkets, such as Lee Summit. Lee Summit has been crazy hot the past years. I think if you're looking from the standpoint of industrial real estate, it really depends on if you're going more towards those newer premium products or if you're going towards more affordable product. Yeah. I would say from the affordability standpoint, you're probably going to be more Eastern Jackson County along I-70, and Independence, Blue Springs, Grain Valley areas, or probably on the Kansas side, probably KCK. As you start going more south in Johnson County towards Lenexa, I see that those are more of a transportation logistics hub, which means that you're going to have an increased amount of dollar per square foot for how much you're going to be charged if you're leasing space there.
Yeah, most definitely. All right, Micah, on the multifamily side, what are you seeing in regards to demos? What conversations do you have with investors? What are they asking about, and what's important to them?
Yeah, I think that they want to be in a location. I mean, it's all about location and where is the growth taking place? Where do people want to live? And like Nathan just said, I mean, Lee Summit has been a huge area in the city for growth. We've seen a lot of new Class A products that's been built over the last couple of years and is currently being built. On the Kansas side, that's where the majority of the new units have come online is in Johnson County. And you see like a lot of growth pushing south in Overland Park, and so with these new products coming online, you're seeing beautiful new communities with fantastic amenities, and they want to be close to shopping and great dining options and things like that. And so when you look at kind of the hot spots for that, I think people do think of Overland Park for one. And number two, on the Missouri side, I think it's really Lee Summit. So those are kind of the top locations that people are really talking about and that are really pushing towards.
Yep. Yeah, I think another demographic point to make here is, where are people going to send their kids to school, right? And so that's going to drive a lot of population growth, which population growth then drives business and economic growth, which then drives retail and industrial growth. So I think that good schools in the areas that you just mentioned are highly sought after for in regards to their school districts is another demographic area to look at. Awesome talk, guys. That was.
I would say the Northland, and that's one thing we didn't discuss, but the Northland is
Sure.
right here that you're seeing an increase in demand as far as where population growth or is trending towards.
Yeah, you're absolutely right. I think I was having a conversation with my buddy earlier this morning, and he lives in the Northland. He is just he wants the Northland to become its own city and get away from being in Jackson County. And there's a lot of thought around that and why it should be, because tax revenue, where does it go? It goes into a lot of the urban areas of Kansas City. So, but absolutely lots of development, lots of economic growth, and many new subdivisions and multifamily being absorbed and developed in the Northland. If you're not familiar with Kansas City, the Northland really is subdivided by the Missouri River. It's where our airport is, but it is a thriving community. But the funny talk that we have in regards to the Northland versus Southland is, hey, I don't really go south of the river, or I don't go north of the river unless I'm going, to the airport. So it really it is dependent upon knowing those different submarkets. And that's what we're here to help our clients work through, is where they want to be at and why they need to be there and the different drivers for each one of those areas. And I think we just showcased that really well. So I appreciate all of you all for doing that. All right, we're going to jump in really quickly to the Fed put, which I don't even know if most people might not know. I'm kind of an economic junkie, so let's just discuss this concept. But the investors put would be investors are counting on the Fed to avert a recession by lowering interest rates, right? So this is the concept that we see commercial real estate prices heading in the right direction because of it, maybe a potential interest rate cut, right, to stabilize the economy. And so recently we've seen signs that the Fed might be ready to step in and to support the economy. And that intervention is aimed at preventing a significant downturn, right? So they're tracking obviously the jobs and the unemployment rate, and they're tracking inflation. And so with the Fed signaling its readiness to provide support, we can expect some downward pressure on interest rates in the next 6 to 12 months. That could help maintain or even boost commercial real estate prices, right? I mean, the S&P 500 just jumped to a new record last week of 5509. And that was because of better than expected Tesla vehicle deliveries. I mean, the stock market is at all-time highs. And that's one thing that we're always tracking. Again, we're not economic forecasters, and anyone who says that they know exactly where interest rates are going, you should probably head in the opposite direction, because the last 24 to 36 months have blown everybody's expectations out of the water. But it is something to keep an eye on as an investor. I know many times we have conversations around that. Green Street Property Price Index, it's tracking where commercial real estate prices are. And I want to key in on this specific area right here, this dip, because that is the March, April, May, June dip of 2020, where we went down significantly. And that was a huge valley in regards to commercial real estate. It bottomed out right around 120 on this index. Then we saw the Fed step in, and we saw them lower interest rates extremely fast and at a big rate, which then really juiced up commercial real estate pricing. Ever since the Fed has started their quantitative tightening and their interest rate increases, we've seen the commercial real estate prices start to dip back down. And we're in an interesting period now, because we're only about 3.6 basis points above the lowest of the low. But what's different? Well, we've talked about what's different. Inflation is different. Interest rates are different. And the real estate environment is different. But we have seen over the last 12 months, or really 6 to 12 months, starting to trend back upward, which is a really interesting space to be in regards to commercial real estate. So this is data that is widely available. It's the Green Street Commercial Property Price Index. You can Google this. You can see it where it's been at in different years in different sectors, down to the month, down to the week. I love keeping track of this, and they do a really good job of tracking commercial real estate prices. So just something to keep in mind in regards to where pricing may go. And we might have more deep dive conversation around one of my favorite topics, which is the 18.6-year real estate cycle, in future episodes of this. Now, Katie, I'm going to bring you up. Micah, I'm going to bring you up. Nathan, you are all now up on the panel here. So let's talk about some of these Kansas City notable developments. Micah, you've already talked about the Panasonic $4 billion electric car plant, right, to create batteries. It's a massive, massive project that's happening out in DeSoto, Kansas. So what are you seeing in regards to Western Kansas City, Olathe, DeSoto, anything specifically around those areas that investors should keep their eyes on the ball? Because when this was announced, I had my phone ringing off the hook of people saying, "Hey, did you see what was going on? You see what was going on?" Yeah, I was like, yeah, I knew it was coming way before it got reported. But what can we do to make make some good investments around the area? What do you think about the Panasonic battery plant?
Well, I think it's going to be really, really fantastic, and like I said, it's going to bring in thousands of jobs, which is
4,000 jobs.
Yeah, 4,000 jobs. I was actually at one of the luncheons for, it was either the downtown council or something like that, and one of the heads of Panasonic had come in and was talking about the project, talking about all the jobs that they're going to bring in, and a chunk of these jobs are going to be engineering jobs. And then, but the majority of them are going to be just regular workers, and how they're going to provide the training necessary. So you don't even necessarily need a whole lot of skills going into this. They will train you up for this job. And what that means for the area is that local workers can draw in. So that means that, we're not going to have a massive influx of people from outside of the Kansas City area. We're going to have a lot of local people right here who can jump right in and have a job, which is great for the local economy. And we talked a lot about how this is going to have ripple effects across our region, across the Kansas City area. And so it's not just, well, that's just a Kansas thing, those are Kansas jobs. No, this is going to have an impact across our area, and we're going to see a lot of growth and economic impact investments. And you're seeing construction jobs from these different factories that are being built, from the data centers, kind of shifting a little bit to the Google investment that we're seeing, over $1 billion investment from them. And and so when you're talking about trying to focus in on, okay, where do I need to be? I mean, if you're looking really intensely at a specific location on where these developments are taking place, I think what we're going to start seeing, and we have started seeing, is developers are coming in and they're starting to put different things in close proximity to this, and so
Yes.
the Panasonic plant is going in DeSoto. And so you've got people that are looking at that corridor along the interstate there, and they're trying to figure out, okay, where can we develop next? What can we put in here? What kind of multifamily properties can we put in here? What kind of retail properties can we put in here to capitalize on this?
Absolutely. Yep. Some cool things happening up in the Northland as well, with Meta putting in an $800 million infrastructure and data center there. Katie, what else is going on in the Northland? Because I know there's many other ones happening around MCI and the airport. Obviously, we didn't even talk about our new airport here in Kansas City, which is definitely revolutionized and given everybody a better first impression when they come to the KC area. But anything in regards to the Northland that you're seeing that we haven't really impacted or highlighted here?
Yeah, we talked about Meta obviously up here, but maybe not even so much in the Northland, but along where Casey Current, along the river there, that we didn't touch on here, just the amount of development that's down there. And they talked about that outdoor arena, and just there's so much development down there. It used to just kind of be a quaint little park, and I think that's interesting. And then the other thing, obviously, Barbie is wearing a Chiefs jersey, but I mean, the debate in Kansas City is where the Royals and the Chiefs will ultimately end up. So that's another big thing of kind of figuring out where in Kansas City that's going to happen.
Absolutely. Nathan, I look at this screen and I can just see all of the big names investing in this area. But what impact when these big companies come in? For example, when Tesla moved their headquarters to, I believe, Austin, Texas, right? People were like, oh my goodness, look at this. This is crazy. And the real estate around there obviously went up. We didn't even mention the streetcar being finished here at the end of 2025 or at the mid to end 2025, and how that impact is going to have in the Midtown to the Country Club Plaza, and being able to connect via streetcar, to the main corridor of the city, right? I mean, but that's one other piece. But like, as these larger companies come in, that creates opportunities for the companies that serve these larger companies. And so, what does that mean for space around those areas? Any trends, any factors to be considered there?
Yeah, I just think it means an increase in demand for properties that are situated around these developments. But yeah, I would say outside of these key developments that a lot of people are aware of, there's a lot of build-to-suit going on around the entire KC Metro. I mean, that is developers partnering with tenants to do longer-term leases and giving them some sort of option to purchase that property eventually at some point. Now, that's been an ongoing trend, especially the past couple of years, and I think it's going to be an increasing trend, especially going forward with just how interest rates are. I mean, developers are looking for more stability. They're looking for more things that they can account for instead of things that they don't have to deal with the lease up process. They have a tenant that is ready to move and actually lease out the space once it's ready.
Absolutely. That's a great point to make and very noteworthy. All right. Lots of stuff going on in Kansas City, and we were a part of it in Q2. We did a lot of real estate in Q2, and it was about $12.8 million worth of real estate. I think it was close to 17 transactions, something along those lines. And so we had a lot of transactions going on in Q2. We are hoping, and we are cautiously optimistic that trend is going to continue into Q3, into Q4. There's a lot of indications that it will. And so we're having a lot of conversations with out-of-state investors that are interested in Kansas City, and really hammering home, like, hey, if you're a property owner right now and you have a loan that's coming due from a maturity standpoint, it is the right time to get involved with a broker opinion of value here at Exchange Commercial Real Estate. We're doing that across industrial, we're doing that across multifamily and retail properties for investment and for owner users. And, like Chad's not here today, but at the same time, if you're a dentist or a medical professional thinking about trying to buy or lease, your next building, he's definitely a great contact to have. So Q2, fantastic quarter. Couldn't have done it without this team. It was really a really strong quarter, and we're excited to continue that momentum into Q3. If you're interested in getting started into Kansas City, right? We just talked a lot about different areas and developments and the team that you might need to be able to put in place so you can buy your investment property in Kansas City. Make sure to check out the Kansas City Deal Navigator, which is a free educational resource, 7 or 8 emails and a 50-page ebook all about how to get your first deal done here or your next deal done here in Kansas City. And that's going to be right on our website, which is at exchange.com/get started. It's all there. You're going to love it. We put a lot of time and effort into this, and we've had really great feedback. Katie, some of the upcoming events that you've been spearheading, especially our golf tournament, but walk us through. I'll start with CCC. I've recently joined the board of CCC, Contractors, Closers, and Connections here in Kansas City. Our next event is this month in 15 days, July 25th from 5 to 8 p.m. It's on the Plaza, which, by the way, we didn't mention in our slides, but has recently sold to a firm out of Texas, and they are planning to put over $100 million of CapEx into the Plaza. So I think everyone in Kansas City, specifically around the Plaza, is very interested and very excited for the new face that the Plaza might have, amongst many other things. So make sure to come to that event. It's really, really well attended. They usually have a really good speaker, drinks, food, everything is there. Light throwers, people with flames in their mouths. It's really a lot of fun, and we have a good time at that event, and I'd love to see you there. But Katie, talk to us about the Together We Win. This is our 3rd annual golf tournament. What's going on with that? When is it, and how can people get more information?
Also, I may be a little biased, but I'm pretty sure it's the best charity golf tournament in Kansas City. So it is on Monday, September 23rd, at the Country Club of Leawood. We have the whole course that day to ourselves, and there are sponsorship opportunities as well as teams. It's a 4-person scramble with a shotgun start at noon. So it's a great day to go out and network. Even if you're not a big golfer, for companies that want to sponsor, there's opportunities to set up at holes. We're really flexible with sponsorship opportunities. So it's a great day. You won't leave there hungry or thirsty by any means. So yes, we do have a few teams and sponsorship opportunities still available.
And Operation Breakthrough is one of my favorite nonprofits here in the city. Really, really doing great work. We got to volunteer there a couple of years ago, and it's just really phenomenal what they're doing with the city, with children, and getting them the resources that they need to thrive. So very excited to be able to donate a whole day of our team, and a lot of people coming to play golf. It's going to be competitive. The course is in great shape. I can tell you that from firsthand experience. It's my home course, and I'll be out there slapping it around, trying to get the top score as well. But it is phenomenal. We have a great day planned. Very excited about that. All right. This was the inaugural episode of the Kansas City Market Pulse, and we're going to be doing this every 2 weeks. And it's you may not be able to see it, but it takes a lot of effort to get all of this information put together. And why we're doing it is really to bring value to our clientele and to position us to help you in regards to your next decision, either purchasing or selling or leasing commercial real estate in Kansas City. So please do reach out to us. Follow us on LinkedIn. We're going to be active here, going live on YouTube and on LinkedIn. Every 2 weeks, we might bring in some expert speakers specifically talking about their subject matter, and let us know what those topics might be. But if not, we'll be here just giving updates about what's going on in the city so you can stay on top of the pulse. All right, Nathan, Katie, Micah, thank you all so much. And thanks for everyone who tuned in. We'll see you in 2 weeks. Bye-bye.